I'm getting more and more questions about the possibility of the United States going into a recession in 2025. Here are some things that you should look for. Stay tuned. Hello, I'm Stephen Hammond with Christian Values Investing. Today I have with me Grayson Shaw, a registered investment advisor. And Grayson, I'm hearing so much about how much we are adding to the deficit on a yearly basis. You know, 2024 is looked at, we've added $1.8 trillion to the deficit, and we're actually spending at a rate of about $1 trillion for every 100 days. Tell me, Grayson, what you know about this.
Well, yeah, spending has gotten really out of control. The U.S. government spent $6.75 trillion in 2024, and that boils down to about $18.5 billion every single day. Now, just for some perspective, that's going to be about 1.9 billion Big Mac meals, which is enough to feed everybody in China lunch with a Big Mac combo, and then have some left over. That's a lot of money, isn't it?
That is a lot of money. Have you put your order in for a Big Mac?
I sure haven't.
Me neither. I might would order a quarter pounder anyway with cheese. You know, it's been reported that our weekly wage growth has been decreasing about 2% every week. You know, we had this twice in the past 50 years, and one time was under Ronald Reagan. As soon as he took office, wage growth was going down, and also during the time right after George Bush Sr. was in office and Bill Clinton took over, that wages were decreasing. And this is something really that has gotten economists frightened, that wage growth is decreasing instead of increasing. We've had inflation over the last 4 or 5 years. It's been pretty astronomical. So Grayson, one of the things that a lot of economists look at when it comes to a recession is an inverted yield curve. And that's when the 2-year Treasury gets higher than the 10-year Treasury. And what was noted in July 2022 is when that happened. And we've been in an inverted yield curve. And what that means is this. Like if you wanted to go to the bank and you wanted to buy a CD, a 1-year CD would be paying more than a 3 or 4-year CD. And usually it works just the opposite of that. The further you go out, the higher the percentage yield that you would receive on the CD. But when the yield curves are inverted, it's always historically pointed to a recession down the road. And you know, we've been in a inverted yield curve since July 22, but Grayson, what's so interesting in it, starting in August 2024, this year, what has happened is that it's got uninverted. And what that means for a lot of people is that the recession is right around the corner. So you as an investor, what you need to know is you need to kind of put this in the back of your mind and maybe kind of be looking so you'll know that this could be on the horizon. Grayson, you know, what's been happening over the last 16 years or so is our deficit has been doubling about every 8 years. Now, if you go back to 2016, we were at $19 trillion in debt. Now we're at $36 trillion in debt. It's doubling about every 8 years. So if you use those same projections, you're looking at 8 years from now, we're going to roughly be at $72 trillion in debt. And 8 years after that, we'll be real close to $150 trillion in debt if we stay at the same pace. But a recession is what we're really wanting to nail down today, or we're on the road to a recession in 2025. So here are some things that you probably want to look for going forward. In 2025, you really need to start looking at corporate earnings. when corporations start coming out and earnings are coming out negative, if forecast going forward starts coming out negative, that should throw a red flag. If you start seeing unemployment increase, that should give you a red flag that maybe, hey, recession is around the corner. Grayson, do you know anything else that maybe what a person needs to look for going forward to really see if a recession is around the corner?
If the housing market starts to decline, that can also be another indicator of a declining economy. As the real estate goes, so goes the general market.
Also, probably one of the last things we want to mention today is looking at retail sales. In the next probably 2 to 3 weeks, we'll start getting retail sales for the year end. We'll find out how Christmas did, how spending went through Thanksgiving, that type stuff. And that's very important. If you start seeing a decrease in retail sales, it's another red flag that a recession is around the corner. So our advice to investors today is to be really looking at the market, pay a close attention to the news, what's coming out, and because you want to react fairly quickly if a recession's around the corner, if it's about to take place. Sometimes you'll see, and this is usually too late, when you see GDP start decreasing 2 quarters in a row. Usually you're too late then. The market's already headed down and you're about too late. So take a close look at some of these things that were mentioned, and if it looks like the numbers are coming in negative, it may be where you want to start raising cash and start lowering your risk that you have in the market. Grayson, is there anything else that people need to know about the possibility of a recession in 2025?
I also wanted to touch on how cutting government spending could actually hurt the economy. And now we talked about how it would be a good thing overall and it would be healthy for our nation and for our government to be fiscally responsible. But if we go back to macroeconomics that most of us took in high school, some of us took in college, the equation for GDP is consumer investments, business investments, government spending, net exports. And all those things added together are going to give you GDP. If you take out 1.8 trillion in government spending, that is going to have an impact on the economy, and that could hurt the stock market. However, I don't believe that it would be an astronomical crash like some people predict.
Until next time, may God richly bless you.